Look, if you're still listening to the experts telling you to save your way to freedom, you've already lost. We've all seen the clip. Kevin O'Leary, sitting in a high-back leather chair, tells you that your $5 latte is the reason you're not a millionaire. It's a classic. It's catchy. And in 2026, it is mathematically illiterate, dangerous advice. The latte factor is a fairy tale for people who are comfortable being average. It's a distraction designed to make you feel like you're doing something productive while your purchasing power is being incinerated by an economy that doesn't care about your discipline. If you think skipping a morning coffee is going to offset a 300% increase in housing costs or the systematic devaluation of the currency, you aren't just optimistic, you're delusional. Saving pennies won't make you rich. It will just make you a very disciplined poor person. In this environment, saving is a defensive play in a game that requires total offense. The math has changed. The gatekeepers have moved the goalposts. In the time it takes you to save $1,000 by cutting out luxuries, the asset you're trying to buy has likely increased in price by $10,000. You are running a race against a treadmill that is set to a higher speed than you can sprint. If you're still broke, it's not the coffee. It's not the Netflix subscription. It's the strategy. You are using a 1950s map to navigate a 2026 minefield. The wealthy don't get wealthy by minimizing their life. They get wealthy by maximizing their deployment. The secret isn't in what you keep. It's in where you point your capital. I'm going to show you exactly why the 10% savings rule is a trap for losers and how you can flip just $100, your first $100 into a legitimate fortune this year by using the anti-budget. This isn't about deprivation. This is about financial dominance. We are done playing small. We are done counting change while the world moves on without us. If you want to stay in the middle class, keep your coupons. If you want out, pay attention. The problem with taking advice from a guy like Kevin O'Leary is that he's speaking to you from the finish line while you're still trying to find your shoes at the starting blocks. When a multimillionaire tells you to stop spending $5 on coffee, he's not giving you a wealth build. A strategy, he's giving you a lifestyle tip for someone who already has more money than they can spend. This is the celebrity trap. They preach frugality because it's an easy, digestible soundbite that makes them look disciplined. But here's the brutal truth they won't tell you. Kevin O'Leary didn't become Mr. Wonderful by skipping lattes. He became a titan of industry by taking massive risks, scaling businesses, and deploying capital with a level of aggression that would make the average saver vomit. When you follow this, don't spend advice. You aren't becoming an investor. You're developing a scarcity mindset. You are training your brain to see the world through a lens of less. You start obsessing over how to shrink your life to fit your income, rather than figuring out how to expand your income to fund your life. Being cheap isn't an investment strategy, it's a mental prison. The rich do not just save, they multiply. They understand that money is a tool, not a trophy to be kept in a glass case. If you take your $100 and put it in a high-yield savings account, or, heaven forbid, hide it in a jar under your mattress, you aren't saving it. You are watching it die. By December 2026, the purchasing power of that $100 will have been devoured by the silent tax of inflation. The cost of energy is up, the cost of housing is astronomical, and the cost of basic goods is volatile. In a world where the floor is constantly rising, standing still means you're sinking. If you treat that $100 like a sacred relic that can never be touched, you've already lost the game. The anti-budget rejects the idea of the piggy bank. We don't want a pile of depreciating paper. We want a fleet of soldiers working for us 24/7. Saving for the sake of saving is a loser's game because you are betting against the very institutions that print the money. You cannot win a game of keep away from the person who owns the ball. It's time to stop being cheap and start being calculated. The reason you are still poor isn't because you aren't working hard. It's because you are working for the wrong things. Most people are caught in a cycle of conspicuous consumption without even realizing it. You've been programmed to believe that the things you own define your status, when in reality, The things you own are usually the very weights keeping you at the bottom of the ocean. Let's break down the fundamental difference between the Gareeb mindset and the Ameer mindset using the exact same $100 bill. The Gareeb or poor mindset sees $100 and thinks about what they can get for it. They see a pair of flashy sneakers on sale. They think, I'm saving money because these were originally $150. They buy the shoes. 2 years later, those shoes are scuffed, smelly, and worth exactly $10 at a garage sale. That $100 is dead. It's gone. It provided a temporary hit of dopamine and a fleeting sense of looking rich, but it left the person fundamentally poorer. They traded hours of their life, the time it took to earn that $100, for a piece of rubber and fabric that depreciated by 90%. The Ameer or rich mindset looks at that same $100 and asks, what can this $100 do for me? They don't buy the shoes. They buy an asset. Maybe they buy a share of a high-growth company, or they invest in a tool that allows them to produce more value, or they deploy it into a fractional real estate play. That $100 is now a soldier. It's out in the world, working while they sleep. 2 years later, that $100 hasn't just retained its value, it has potential. Grown to $130 and is throwing off cash flow. The biggest mistake you're making right now is the someday delusion. You're waiting for enough money to start. You tell yourself, once I have $10,000, then I'll be an investor. Once I get that promotion, then I'll start the anti-budget. This is a lie you tell yourself to avoid the discomfort of starting. Wealth is not a destination you reach. It is a muscle you build. If you cannot manage $100 with the discipline of a hedge fund manager, you will never have $1 million to manage. The math of the anti-budget is scalable. If you can't redirect $50 of a $100 windfall into an asset, you won't redirect $5,000 of a $10,000 windfall. The system wants you to wait. The system wants you to feel like $100 is too small to matter. So you might as well spend it on a steak dinner or a new shirt. But $100 is all you need to break the seal. $100 is the seed. In 2026, the barrier to entry for the global markets is zero. You can buy fractional shares. You can start a digital side hustle. You can acquire education that increases your hourly rate. Stop being a consumer of other people's dreams and start being an owner of your own. If you are still broke, it's because you are choosing the comfort of a $100 pair of shoes over the freedom of a $100 investment. One makes you look like you have money. The other actually gives it to you. The anti-budget isn't about being miserable. It's about realizing that nothing feels as good as being unshakable. The 2026 anti-budget blueprint, the $100 dominance strategy. Most people treat $100 like it's lunch money. They see it as a rounding error in their monthly budget. But in the anti-budget, $100 is your primary weapon. It is the tactical seed that, if planted with precision in the 2026 economy, will outpace any 10% savings plan your bank is trying to sell you. We aren't just saving this 100. We're deploying it across 3 strategic fronts to ensure maximum velocity protection against inflation and an exponential return on your most valuable asset, yourself. Tier 1, the Iron Fortress, $40 in index funds, ETFs. Your first $40 goes into what I call the Iron Fortress. This is the foundation of your wealth. We aren't picking individual meme stocks here. We are buying the entire machine. In 2026, the S&P 500 isn't just a list of companies. It's a collection of the most ruthless, profit-driven entities on the planet. By putting $40 into a ticker like VOO, Vanguard S&P 500 ETF, or VTI, Vanguard Total Stock Market ETF, you are instantly becoming a partial owner of the 500 largest corporations in the U.S. Why VOO or VTI? Because they have an expense ratio of roughly 0.03% that is practically free, while the losers are paying 1 to 2% in management fees to some guy in a suit who can't even beat the market You are capturing every ounce of growth for yourself. Even with just $40, you can use fractional shares. In 2026, every major brokerage, Fidelity, Schwab, Vanguard, allows you to buy slices of an ETF. You don't need $500 for a single share. You put your $40 to work immediately. This is your safe base. It ensures that no matter what happens, you are riding the wave of global capitalism. It is the defensive line that keeps you from ever going back to zero. Tier 2, the future-proof strike. $30 in 2020. 6-Tech AI. The next $30 is for offensive growth. We are in the middle of the greatest technological shift in human history. If you are not an owner of the companies building the future, you are a victim of it. In 2026, artificial intelligence has moved past the hype phase and into the monetization phase. Companies are no longer just talking about AI. They are using it to replace entire departments and skyrocket their margins. You want a piece of that efficiency. Take your $30 and deploy it into a basket of AI and semiconductor titans. We're talking about NVIDIA, NVDA, which remains the backbone of the AI hardware world, or Microsoft, MSFT, and Alphabet, Google, which are embedding AI into every piece of software on Earth. Alternatively, look at specialized ETFs like RD, iShares Future AI and Tech. This allows you to own the entire AI value chain, from the chips to the data centers to the software. Again, use fractional shares. That $30 buys you a seat at the table with the smartest engineers and the most powerful algorithms in existence. This is the portion of your anti-budget designed to deliver asymmetric returns. While the S&P 500 gives you steady growth, this tier is where you find the 5 times or 10 times multipliers. Tier 3, the skill multiplier, $30 in self-education. Finally, the most important $30 of the entire $100. This goes into self-education. The biggest mistake people make is thinking that investing only happens in the stock market. But the best ROI, return on investment, in 2026 isn't a stock, it's your own skill set. If you can take $30 and buy a book like The Psychology of Money by Morgan Housel or Atomic Habits by James Clear, you are upgrading your mental operating system. But don't stop at books. In 2026, $30 can get you a specialized tool or a subscription to a platform that teaches you a high-income skill like AI prompt engineering, data analytics, or cybersecurity. Think about the math. If you spend $30 on a course that teaches you how to automate a task at your job or for a freelance client, and that skill allows you to earn an extra $500 next month, you just achieved a 1,600% return in 30 days. No stock on the planet can touch those numbers. The anti-budget recognizes that your earning power is your greatest lever. If you are stuck making $50,000 a year, your 10% savings won't save you. But if you use that $30 to learn a skill that bumps you to $100,000, you've just changed your life forever. Invest in the machine that makes the money, that's you. The 2026 summary table category allocation goal tickers. Tools Safe Base $40 long-term wealth. Safety VOO VTI future. Growth $30 AI. Tech exposure NVDA. MSFT, RD Skill, Multiplier, $30 increase income specialized books, course. If you want the anti-budget to work, you have to stop the bleeding. You can't fill a bucket if it's full of holes. And right now, most of you are carrying buckets that are basically just handles. To protect your first $100 and every dollar that follows, there are 3 specific wealth killers in 2026 that you must avoid at all costs. These are the traps the system sets to ensure your money flows into their pockets instead of your assets. Fast fashion and hype clothing in 2026, the dopamine hit of a new outfit is the most expensive drug on the market. Whether it's ultra-fast fashion or overpriced hypebeast streetwear, the math is the same: absolute destruction of capital. The second you walk out of a store or click confirm order, that clothing loses 90% of its value. You are trading $100 of hard-earned capital for something that will be worth $10 at a thrift store by next season. The Gareeb mindset buys clothes to look rich. The Ameer mindset wears a plain t-shirt while their bank account looks heavy. Stop renting your status from brands that don't know you exist. 2. New cars on debt, the interest trap. This is the single biggest mistake the middle class makes. Taking out a 6% or 8% interest loan on an asset that depreciates. 20% the moment you drive it off. The law is financial suicide. In 2026, with car prices at historic highs, you aren't just paying for the car. You are paying a stupidity tax to the bank. A $500 monthly car payment, if invested in the Iron Fortress strategy we discussed, could be worth nearly $1 million over a career. Is that new car smell worth $1 million? If you can't buy it in cash, you can't afford it. Period. Get-rich-quick crypto schemes and meme coins, the 2026 market is flooded with influencers telling you to ape into the next coin with a dog or a frog on it. Listen closely, this is not investing. It's gambling in a casino where the house always wins. These coins have zero utility, no underlying value, and are designed to leave you holding the bag while the creators exit with your money. The anti-budget isn't about luck. It's about calculated dominance. We don't bet on memes. We invest in the infrastructure of the future, like the AI and tech titans we covered in part 4. If you see these 3 things run, they are the sirens calling you toward the rocks of mediocrity. If you can avoid these, you've already won half the battle. 2026 is going to be a year of extreme divergence. The gap between those who understand the new rules of money and those who are clinging to 1990s common sense is going to become an unbridgeable chasm. This isn't just another year, it is the year of the smart investor. The tools have never been more powerful. The access has never been more democratic, and potential for a $100 seed to grow into a forest has never been higher. But knowledge without action is just entertainment. If you watch this entire video and you don't move a single dollar into an asset today, you didn't learn anything, you just watched a movie. Don't be the person who listens to billionaires who forgot what it's like to have nothing. Their advice is built for a world they already conquered. Your strategy must be built for the world you are about to take over. The anti-budget isn't a suggestion, it's a survival manual. You don't need a massive windfall to change your life. You don't need a miracle. You need the courage to take your first $100 and deploy it with the precision of a surgeon. Whether it's $40 into a Fortress ETF, $30 into the AI revolution, or $30 into your own skill set, the only wrong move is standing still. I am challenging you right now to break the cycle. Stop being a spectator in your own financial life. 2026 will pass you by whether you are ready or not. Make sure that by December, you are looking back at a portfolio of assets instead of a pile of receipts. Comments start below. You are committed to investing your first $100 this month. I want to see who is actually ready to execute and who is just talk. Let's build the tribe of the unshakable. Subscribe now for our weekly 2026 wealth updates where we track the markets, the tech, and the tactics you need to stay ahead of the curve. The system is designed to keep you small. The anti-budget is how you get big. Start today.